Thank you, Viren, and good afternoon, everyone. Nirmal Bang Institutional Equities welcomes you all to the third quarter FY24 results conference call of IFB Industries. I would like to thank the management of IFB Industries for giving us an opportunity to host the call. Management is represented by Mr. Pradeep Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO, Home Appliances Division, Mr. Arup Das, Head Marketing Engineering Division, Mr. Anand Reddy, CEO, Motor Division, Mr. Bikramjit Nag, Chairman of IFB Industries, will also be joining us on the call. I now hand over the call to the management for opening remarks, post which we will take questions from participants. Thank you, and over to you, sir.
Good afternoon, Natasha. Good afternoon, everyone. I welcome you all for IFB Industries investors call for the third quarter FY24. Joining with me today are Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. Before we start, with profound grief and sorrow, we inform that our founder and chairman, Mr. Bijan Nag, passed away on 28th January. He was admitted to a hospital in Singapore for the treatment of past few months. He was 81 years and 6 months old. We have already communicated this to National Stock Exchange of India on 28th January 2024. As the founder and executive chairman of the company, he has played a pivotal role in the formation and growth of the company. Mr. Nag established Indian Fine Blanking Limited, which later changed to IFB Industries Limited, and also the other companies, that is IFB Agro Industries Limited, IFB Automotive Private Limited, etc. The company has immensely benefited from his vision and leadership. He introduced fine blanking technology in India and also introduced state-of-the-art front-loading washing machine into India. He was a true visionary and firm believer of Make in India initiative from his early years. Mr. Nag's passing away is an irreparable loss to the company. We'll all remember him as an inventor, an entrepreneur, and a true business mentor. Now I will start with the reporting. The company has reported a total income of 1140.34 crore during the third quarter compared to 980.79 crore during the same quarter last year. During the quarter, the revenue grew by 16%. During the third quarter, EBITDA was 70.36 crore, 6.17%, compared to 33.07 crore for the same period last year, with a EBITDA percentage of 3.37. EBITDA was substantially higher than last year, mainly because of lower reduction in material cost and revenue growth, which resulted in higher gross margin. For the period up to YTD December, the year, company has reported a total income of rupees 3277.31 crore compared to 3131.98 crore for the same period last year. YTD revenue growth for the year was 5%. EBITDA margin for the YTD period is 185.87 crore, that is 5.67%, compared to 145.49, that is 4.65% for the same period last year. EBITDA during YTD FY24 is significantly higher compared to the same period last year. Improvement in margin is mainly due to reduction in material cost, better mix, and reduction in expenses. During the year, company's net cash position also has improved. With this, I request you to start the question and answer session, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yep. Thanks for the opportunity and condolences to Nag family and the entire IFB team. So my question here would be on the presentation that you have uploaded. So where we have highlighted about the cost-saving initiatives which we would be seeing in the coming quarters. As highlighted in the second quarter earnings presentation, we were very number specific with regards to 44 crores savings in input cost during fourth quarter and roughly around 8 crores monthly savings from fourth quarter onwards. So can you, now we are already into quarter 4, so probably are we on track on achieving this, and probably what should be the benefit that we can expect in the current quarter, and probably what it would be in the first quarter on the input cost, and secondly even on the fixed operating cost that you have talked about 6 to 8 crores on a monthly basis, and when it should be when it should flow, whether it would be from the start of the quarter or probably we should expect somewhere around March onwards. So that would be helpful, sir.
Mr. Chatterjee, would you like to answer that, please?
Raju, answer, please.
So, as far as the fixed cost reductions are concerned, where we had indicated a 6 to 8 crore saving per month, so we are on track to complete the work by March. In fact, even on a third quarter basis, we have saved money in this quarter from that head. So the full impact of this in Q1 of next year will be delivered. As far as the material cost reduction figure that we had given, maybe about 50-60% of that will accrue in quarter 4, and again the full impact in quarter 1 of the next year.
Right. So probably we continue to stick with the numbers that we have highlighted, and probably
yes.
On a trend basis, we'll continue to see margin improvement even on sequential basis. Is this understanding correct?
Yes.
Yes, sir. Thanks for this. So my second question would be on the top line performance. So this quarter, obviously, shift of festive season also would have aided to strong top line performance. Can you throw some light like how the things are progressing on the initiatives that we have taken with regards to placement of sales promoters, and probably we have been targeting for better extraction in the existing outlets. Also, we were looking to scale up our presence into alternate channels like modern format retail, regional retailers, and e-com. Probably how things are panning out there, and when should we expect industry outperformance by IFB on a consistent basis?
So on the last part, in terms of a fixed timeline on the completion of the actions resulting in the kind of performance that you have spoken about, as we have earlier committed, our internal target was to complete everything by end of this financial year, so that we are able to show the performance the way we want in the quarter 1 of the next year. As far as the progress is concerned, on the work on the key accounts, the large format retail, the distribution, all that is WIP. So let's say if we have to finish everything by March, we are on track. If there is a spillover, it will be completed within the quarter 1 of next year in any case. So those actions internally are on track, and they are on a weekly review bucket now. They are being driven. And changes in the sales team that need to be made to ensure that we get the results on the ground, those are also being made in parallel. Does that answer your question, Manoj?
Yes.
Or is there something specific that...
If you can throw some light, probably how things are shaping up in room AC for our branded business, and even for the other brands where we are doing contract manufacturing. So that would be my last question, sir.
So room AC in quarter 3, we actually did much better than the previous year, in line with our own expectations. So after many quarters, in terms of what we decided as volumes, we have been able to deliver that on the brand side. The OEM side has been lesser in quarter 3. As far as quarter 4 is concerned, we are quite confident of getting the numbers because the channel work is maturing and the introduction of the refrigerator is also helpful for the air conditioning channel related work. So the numbers that we have...
Your audio is breaking in between. Sorry to interrupt. Hello, Anand sir.
This is Shankar here. Can you hear me? Manoj, can you hear me?
Rajshankarji, your voice is probably there is some disturbance. Probably we missed you for the last 30 or 40 seconds.
Okay, but can you hear me now?
No, there is still some disturbance.
Hello, can you hear me?
Better, sir.
It's better, sir.
Yeah, it's better. Is it okay now?
Yes, now it's okay. Yes. Please go.
Yeah, okay. Yeah, so as I said, the numbers for the quarter 4 on air conditioners, we are confident of delivering because the channel-related work on the AC piece is maturing and the channel for the refrigerator is also complementary to the air conditioning-related volume targets we have. So that is the result of the confidence that we have on the numbers for quarter 4.
Right, sir. Thank you, sir, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just wanted to know what is, like, in the last few years, we have scaled up other businesses or other segments, other product categories like air conditioner, microwaves. In the last few years, we have scaled or grown those businesses very well. Just wanted to know where are they on with respect to profitability, because whatever profitability we are seeing currently, it is a combined profitability. We are not able to know what is the profitability across the in each product segment. If you can give some color on that, that will be great. First question.
So actually, in our investor reports, if you see some of the previous investor reports, we've actually put out the losses on the AC segment in terms of figures in the reports, and that segment till now is not profitable. So with the material cost reduction that is being made, one of the targets that we've committed to is the profitability of the AC segments, and internally we hope to deliver this in quarter 4. And that is very helpful to the overall company profitability. As on date, the AC segment for us has been losing money.
Okay. And what about other segment like microwave ovens? That is also doing around 300 crore sales, dishwasher, but lower amount of sales, but other segment like the microwave ovens?
Microwaves are profitable for the company. And in fact, IFB sales has a very high percentage of convection series. In the market, if you see the Solo, Grill and convection are the 3 categories. IFB's percentage of the convection series is much higher as compared to the industry, and the convection series is quite profitable.
Okay. Okay. You can, sir, go ahead. Sorry to disturb you. Sir, can I go for another question?
Yes, please.
Sir, one more point. Where we see the margins of the room AC business in the coming years, not quarters. I'm not talking with respect to 1 quarter, 2, 3, 4 quarters. In next 2, 3 years, where do we see? Because we see currently industry players, like leading players, are doing a 8% or 8.5 or 8.79% operating margin. Do we also see that margins to go up for us also?
Mr. Chatterjee, would you like to answer that?
Yeah, going forward, our efforts is towards that only. The entire exercise of increasing revenue, material cost reduction, and fixed cost reduction will lead us to a growth towards that.
Okay. Any short-term or near-term, like the 1-year guidance on the AC business, with bit margin?
We normally do not keep the guidance on margin. But AC, like Mr. Ray said a few moments back, that this quarter will be better.
Okay. And sir, coming to the capacity for the room AC business, what is the current capacity we have? How much more revenue we can do from the room AC business?
So this the plant that we have here on a single shift basis can go up to 500,000 per annum. And incremental increases beyond that are in terms of additions of minor capacities at supplier end, running a second shift instead of a first shift. So that is the capacity that we have around it.
You talked about 500 to 1,000 crore revenue potential from the plant in Goa for RAC.
No, so 500,000 numbers will translate to roughly around 1,500 CR. If you take roughly about 30,000.
Oh, 16 revenue potential. Okay.
Yeah.
Okay. And sir, coming onto a new venture, that is a refrigeration business. So when are you expected to launch that product? And what will be the price and where we will be pricing our product in the market, entry level, mid-premium or premium? Like for washing machine, IFB is always considered as a premium. For rest, what we are thinking?
So the products are already in the market, and the commercial launch of the product was in June last year. And currently, we are in the phase of the ramp up. And in terms of getting our shares in the counters where we are placed and increasing placement, the range that we have is from 193 liters to 306 liters currently in phase 1, which includes both direct cool and frost-free models. The positioning of the products is benchmarked to the relevant competition in a counter. And I would call the positioning in the mid to premium range. We will not be the least priced in the counter for sure. We would be benchmarked to the good players that are there in the market.
Okay.
Does that answer your question, please?
Yeah. I'll come back in a few, sir. Thank you for the answers. Thank you.
Okay.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir. Amongst the appliances range that we have mentioned in the presentation, which are the categories where we today have a lower margin? So we have washers there, we have dryers, ACs, microwaves. So any category which has a fairly lower margin for us, which pulls down the company level margin?
Like we said in the earlier presentation, the single category that has the...
Sir, your voice is...
cracking.
Can you hear me?
Yes.
Yeah. See, as we've shared previously, the single category that has the largest impact on the margin is the air conditioning category. So the rest of the all other categories are healthy. And for us to fix profitability and, report something which is sustainable, the air conditioning category is the category that we have to fix.
So that's a category where you're losing money?
That's a category where the company is losing money.
Sir? Okay. Sir, your voice actually...
Today we can't hear you.
Yes, sir.
How is it now?
No, sir, it's still breaking, sir. No, sir.
Can you hear me now?
No, sir.
Could I get a redial, please, on the phone?
Yes, sir. Now you're clear, sir.
I'm clear? Okay.
Yes.
Okay.
Yeah, okay. So the air conditioning category...
I got your answer. Yeah, I got
Yeah, okay.
Then in the AC today, we are largely OE supplier, or the number that you report includes largely brand sales?
Largely brand sales.
Okay.
And on specific number splits, etc., if you want some details, you could speak to Mr. Chatterjee separately.
No problem, sir. And the other question, two questions that I have. One, when you are indicating this 8 crore per month saving, this 8 crore per month saving is under which head?
So there were two heads of savings that we specifically put into the investor report the previous time. This 6 to 8 crore saving is on all the indirect expenses. They could be office costs, they could be logistics costs, they could be cost of compliances on the EPR regime. And the target that we took was a reduction on the average sales of the last year and a significant reduction, which is this amount. The remaining figure was the impact of the cost reduction on the material cost side.
Material cost side I understood. So when you are saying referring to last year's sales, which means that if your sales are supposed to expand from here, then on the absolute basis, we'll still see rise in costs, but as a percentage of sales, we'll see drop in costs. That's how the interpretation should be?
No, on absolute basis, we should see the reduction in costs. That's obvious cost.
Hello, sir.
Hello.
I need to redial him actually.
Yes, I will redial him.
Hello?
Yeah.
Yes.
Yeah, can you hear me now?
Yes.
So you are saying that,
Yeah, so these are reductions on an absolute basis, basically. That
okay.
can be
Irrespective of the rise in sales.
Yeah, that is the target that we have taken internally.
Okay. And lastly, one clarification I wanted. The EBITDA that you report in the home appliances division in your presentation for the quarter at 57 crores or the full year 9 month at 137 crores is materially higher than what you report in your segmental performance for the home appliances division. So where you have the EBIT number, which is significantly different from the EBITDA. So what is the difference here, sir?
I would come back to you on separately.
Okay. Okay. Thank you.
Thank you. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi sir. Thank you so much for the opportunity. Sir, just in terms of, just picking up from your investor presentation, what you've spoken about that a lot of the new models, both in front load and top load, are getting introduced, and that should help you gain market shares in from 4Q and 1Q onwards. If you can help us understand how has been the acceptability of these models and what's the confidence levels in terms of the market share gains in both these categories separately. Thanks. That's my first question.
So the front load and the top load, the washing machine segment, new product introductions will start from April, and the transition is from April to, let us say, June and July. So you will see the impact of those introductions in the next fiscal year. Currently, they're still not in the market. They're in various stages of field trials, ramp up, tests, etc. The new model range for the air conditioners is already out there in the market, and the impact of that will be seen in the quarter 4 itself.
Okay. So, sir, is it fair to assume that FY24, at least in 9 months, your market shares have been largely stable and the increase will only be seen in 25? Is that one should work with?
Yes, that's right. And as per the internal data that we see, in the last 2-3 months, we have been regaining shares on the front load segment. So we expect that trend to continue, and that is definitely an internal target that we have.
Okay, so in front load you have gained market share, top load is still flat.
Yeah, top load is still flat. That's correct.
Okay. And sir, you spoke about this material cost improvement, the fixed cost reduction, all of that benefit you're saying it will come in by March end. So when you launch these newer products, which we assume is of higher capacity and much more having much more product efficiencies, should one assume higher gross margins on those products? How should one look at it?
I think the best answer to that is that we still have to work out the final details on it.
Sir, you're not audible. Sorry, sir, your voice.
Can you hear me?
No, sir.
Hello?
I will connect you again, sir.
Hello?
Yes, sir. Please go ahead.
Yes, I apologize. The signals are sort of fluctuating where I am. But, as far as the washer segment is concerned, as I said, the final pricing details, etc., we still have to work out. But as far as the company is concerned, our cross margin structure on the washer is quite healthy. So the challenge that we have to deliver is a complete plant utilization to full capacity and a gain in the market share. Per se, there is no real need for the gross margin structure to be improved on the washer side. The profitability agenda on the air conditioner has definitely to do with increasing the gross margin and limiting the losses. Does that answer your question, please?
Yes, sir. Sir, just in terms of this market share gain, now there are two levers to it. Either you fill in a product gap by introducing higher capacity washers. Is that the only lever which will help you gain market share, or are there strategies beyond it in terms of pricing, product features, sales automation that will also drive market share?
There are three parts to the market share gain, and I can share it with you in terms of specifics. I think that will illustrate the agenda we have to drive. One is that in the front loaders, there is a specific 9 and 10 kg capacity segment, which you would call the higher capacity segment as on date. And we didn't have a product there. We introduced a product roughly about 4 or 5 months back, and that volume is ramping up. So just by introducing that product category, there is a market share that has to be delivered. And some part of the market share gain that we are seeing over the last 2-3 months is on account of that. So this is the first part. The second part is that if you really go account by account, every account has a specific action that needs to be taken. So in some place, it is a change in the products which are displayed. In some place, there is a manning that needs to be put into the counter, which will help the sales to consumers. So there is a ground level detailing account by account that has to be done by our sales team, and that is the second agenda for the increase in the market share. And the third agenda is the introduction of the new models from April onwards, which would cover gaps, which might be a price point gap or it might be a feature gap. And that third part is what enables the second part, basically. So the market share gain agenda would be on these three specific action heads. Does that answer your question, please?
Yes, sir. It's very helpful and very clear. So just one other thing, what we have been seeing is commodity prices are on a downward trend for some time now, and that's still kind of continuing at this moment. Given this, should the benefits also come in because the competitive intensity is also stable, or are peers and you passing on this benefit of lower commodity prices? How should we look at it from that aspect, sir?
So some part of the material cost benefit that we have enjoyed in this fiscal year specifically has been a result of the benefit of the lower commodity prices. So that's already in the material cost percentage reduction that you see. If you look at the last 2 quarters, the commodity prices have been by and large stable with a slight upward trend. So if you look at steel, for example, there is a agenda that the steel industry has to drive up the prices, even though they've not moved up significantly, but there is a pressure for them to move up. Going forward, as far as we are concerned, we see commodity prices neither going up nor going down, but in a particular controlled range. The benefit that IFB has now, which is a part of the material cost agenda, is that if we were buying a particular part with a related commodity price, and we were buying it for a front loader and then for a AC, if we combine the purchases of all the product categories that IFB is now, the consolidated purchasing power has significantly increased, and therefore the ability or the agenda to find alternate sources, and hence the related material cost reduction, which could also be a design-led reduction basically. So going forward, whatever material cost benefit we deliver will not come so much from commodity prices. It will come from the other agenda items.
Got it. Very helpful. So just one last question from my side. How are you seeing the overall demand at the ground level, not just for you, just from the industry perspective? Is there any pickup that you see, or is it still kind of muted?
Till December, the market has been either flat or has degrown. So the washer segment has degrown. Air conditioners has a growth in the range of about 10 to 15%. Refrigerators, till let's say 2-3 months back, was having a significant degrowth. So the market is flat and stressed. That trend continues. We don't anticipate a significant change in the quarter 4 on that. But the way we look at it internally is our own agenda at expanding our numeric reach and ensuring that we get much better extraction, because now as a sales team, when we are going into the market to a particular counter, we are going with a much larger basket of products than what we were doing before. And therefore, it is logically should be much easier for our teams to extract more out of the counter. So our revenue-related goals have lesser to do with what's happening in the market and more to do with how effective an implementation we have of this increase in numeric reach and increase in extraction. That is the agenda that internally we are working on.
Got it. Got it, sir. It is very, very helpful and clear. Thank you so much and wish you all the best. Thank you so much.
Thank you.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang Institutional Equities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So you mentioned to the last participant that till December, the growth, there was a degrowth, and especially the washers category saw some kind of stress. Now, when I look at your front load growth, it has been a healthy growth. Now, do I assume that this growth was, even if it is at 29%, now is this a tepid growth, and could this growth be higher if the season was better?
Internally, we believe that our growth needs to be much, much more, and the opportunity is just there waiting, to be honest. So we are not satisfied with the growth that you're seeing, because we believe that there is much more that we can extract. So the answer to your question would be a yes.
All right. Understood, sir. So that was all from my side. Thank you.
Thank you. The next question is from the line of Dhaval Mehta from Aditya Birla Asset Management Company. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question is with respect to the AC division. So out of 106 odd crore revenue which we did this quarter, would you like to quantify what was the OEM sales and what was our branded sales which we did?
25% is around the OEM, and 75% is the domestic.
Okay. And so I'm assuming the larger part of the losses will be on the domestic branded sales. The OEM business will be making profit for us, right?
Mr. Chatterjee, would you like to answer?
Yes. We are making marginal profit from OEM, but the major loss is in the domestic.
And what will be the losses in the domestic business?
The steel YTD loss is around 42 crores EBITDA level.
Okay. So out of roughly around 250 crore business which we did in domestic, we are losing around 42 crore. Now, how number will change, let's say in FY25, forget Q4, or let's say next 2 years? Because what changes we are going to do that we will be able to break even in the domestic business?
So, this is Rajshankar here. The change in the profitability will come from two agenda items that we have. The first is the material cost. And maybe 80% of the work to ensure profitability is on the material cost side. That is the first part. And the second part, which is the 20-25%, is the volume level to ensure that the plant runs to a minimum volume, and therefore the overhead absorption is distributed over that many numbers.
Okay, so what is the overall value, if you would like to share, like what is the plant capacity in terms of value?
So the plant capacity, like I shared a while back, is 500,000 with the assembly line running at a single shift with a little stretch. And if we are able to do volumes in the range of 350 to 400,000, then this segment will have healthy profitability along with the material cost reduction, which we have to complete before March. Does that answer your question, please?
Yeah, got it. But any thoughts of ramping up the plant via increasing our OEM share? Any thoughts over there?
So the OEM is an agenda that we have been working on, but per se, the OEM market has a particular price point expectation, and the product quality and the product build that we have of the air conditioner is tuned to what the IFB brand requires. So the platform per se is not a OEM platform in that sense. So we have people who still buy from us because that quality level and that build level, they are able to defend it in terms of price points in the market. But how much the OEM segment will grow, it's difficult to commit because it is somebody else's call. I think for us, we have to keep looking for, those 2-3 selected OEM partners who can pick volumes. We have to definitely do a lot on our own IFB branded sales. And there is an opportunity of exports that we are looking at very seriously, especially for models like the hot and cold models which we have introduced into the market starting last month. And the expansion in that also gives us an export opportunity. So I think OEM, we have to continue to pitch, but whether we get it or not completely in our control. The second and third piece, which is our own volumes in India, and the opportunity to harness exports. These three are the levers to, load the plant to full.
Got it. And is there any other category apart from AC in our portfolio where we are making losses?
No.
Got it. Sure. Thank you, and all the very best.
Thank you. The next question is from the line of Vivek Kumar from Best Pulse Research and Advisory LLP. Please go ahead.
Sir, am I audible, sir?
Yes, sir.
Sir, given that our platform is for mostly the domestic consumption when it comes to ACs, so how long do you think you will be able to fill a large capacity with branded sales? And the related question is, with respect to, and you are also hinting that the major work is on the material reduction. So how far are we
The material cost work will be completely over by March this year, in line with what we have committed. So the full benefits of that come from quarter one onwards. Hello, can you hear me?
Sir, he is disconnected, I think so.
Okay, so I'll wait for him to join back.
Okay, sir.
Okay. We can continue with the other questions. Please.
Okay,
we can come
I will
back
take the next question, sir.
Yeah.
The next question is from the line of Yashav Garg from Counter Cyclical PMS. Please go ahead.
Sir, I'm trying to understand that, sir, in our third quarter home appliance division revenue of 914 crores, approximately what was the percentage of revenue that came from contract manufacturing and exports?
Mr. Chatterjee, would you like to answer that?
Yeah, the first quarter, the revenue was around 45 crores from the OEM system, basically.
Okay, sir. So any plans to demerge the company into a branded business and a contract manufacturing side, wherein the branded business can place orders just like any other OEM with the contract manufacturing side of the business? And to begin with, sir, why don't we start reporting another segment in our segment results showing EMS sales?
This is Raj Shankar here. Any particular reason that you think that will help?
Sir, because the real opportunity is on the EMS side, and that opportunity is going by as we try to increase our own branded sale. And so it's a totally cluttered market with all kinds of multinational behemoths. Sir, so whereas in the contract manufacturing side, we already have the infrastructure on the ground. So we can just ramp it up if we get the orders like other players in the industry, like Dixon, etc., who used to be far smaller than us, have now become bigger than us. And so that is the main opportunity. So what are the plans to capitalize on that opportunity of contract manufacturing?
Okay, so that's an interesting viewpoint. And I will just share with you what we had explained some quarters back. Is that the way we look at it is that the primary opportunity is the brand sales. And even though the market is very cluttered, if we look back since we began production here in India, there is a set of customers who have given value to the air conditioner we produce for the price point we have and for the performance we've delivered. And especially with the work that we are doing on the network side, and the AC and the refrigerator riding together, the volume play is quite large. This is the primary goal, because at the end of the day, it is the IFB brand that we want to grow. The OEM piece, the way we had wanted to execute it, is that filling up the plant capacity is helpful to absorption of overheads, and it also helps the material cost side because you purchase much more. So the agenda is that, let's say, if we have 500,000 as the current capacity, if 350,000 odd is filled by the brand and 150,000 is filled by the OEM, not working with multiple players as buyers, but with 2-3 players, who lift sizable quantity from us, then it gives the plant the full volume. But as far as IFB is concerned, we are not in the same play as far as, let's say, a Dixon would be or a Number would be, because the ACs that we are producing are a completely different platform. They are built for brand in terms of reliability, durability, performance, etc. So that is the pitch. Yes, a Number or a Dixon have had terrific growth, but as of now, that is not the direction that we have.
So the point being that, sir, all said and done, we are still making 4% operating margin on our branded home appliance business, which Dixon is making on the same margin, doing contract manufacturing with stupendous growth. So had we been making some kind of double-digit margin, then also it would have been understandable. And sir, in any case, we can continue with our marketing efforts on the IFB branded business, sir, and we can still do the contract manufacturing part. So because in any case, we are not operating at full capacity utilization, and I'm not talking about only the AC division, even the rest of the appliances. So what is stopping us from really ramping up the capacity utilization by doing contract manufacturing?
Yeah, it's a fair point you have, and at the end of the day, if we don't deliver a healthy financial performance, the question that you have asked is quite valid. Therefore, our primary agenda of ensuring that we fix this profitability issue, which we have committed in terms of the actions, etc., which are also a part of the investor report, is the primary agenda we have. Now, And a product approach or a product build approach for an OEM and a product build approach for a brand, especially the position that the IFB brand enjoys, are actually quite different. So theoretically, yes, you could fill the plant with either an OEM or brand, but practically you can't, because the product we build is built for the IFB brand. And therefore, a large chunk of the OEM market, which essentially wants a box at a particular price, is not something that we can service.
Sure, sir.
I think your question will be answered if we deliver good profitability, and therefore then, what's happening with the plant in terms of capacity, is a question that gets settled. And hopefully we will do that soon.
And yes, sir. And so lastly, sir, in last call you mentioned that we were planning to clock around 10% operating margin in the home appliances division by first quarter of FY25. So are we on track to achieve that goal?
Yes, as we've shared, that is a commitment we have signed off internally as well, and the entire senior team is fully on this, and we just have to deliver the agenda, and it is something that you all should see as a result.
Sure, sir. Thank you very much and best of luck.
Thank you. The next question is from the line of Ankit Minoka from MRLR Capital. Please go ahead.
Yeah, hi. Good afternoon. Firstly, my condolences on the passing away of Mr. Bikram Nag. I just want to firstly understand how involved was he in the strategic decision-making of the company over the last 3 or 4 years? How were the responsibilities managed between him and Mr. Bikram Nag over the last 4 or 5 years?
I actually couldn't hear you clearly. Sorry.
Yeah, can you hear me now?
Yeah, much better. Yeah, much better.
Yeah, so I wanted to understand how involved was Mr. Bijon Nag in the strategic decision-making of the company over the last 4 or 5 years, and how were the responsibilities managed between him and Mr. Bikramjit Nag currently, and wanted to express my condolences on the passing away of Mr. Bijon Nag.
I think Mr. Bikram Nag is on the line. Would you like to answer that, please? Okay, so Rakshankar here, I'll try and answer that. As far as our operations are concerned, we have been led by Mr. Bikram Nag for quite some time, and therefore, the transition is quite smooth. And I think he was on the call. He got a little disconnected. So once he connects back, your condolences I will definitely convey to him.
Okay, sure.
The line is not clear somehow. I don't know why, but now it's better.
Yes, Mr. Nag is on the line. Mr. Nag, the question was related to transition and.
Sorry, I did not hear the question.
Would you like to repeat, please?
Yeah, Mr. Nag, the question was that, firstly, condolences for the passing away of Mr. Bijon Nag.
Sorry, I can't hear you again. Can you just... Hello?
Wanted to understand that how involved was Mr. Bijon Nag in the strategic decision-making of the company over the last 3 or 4 years, and how were the responsibilities managed between him and you, Mr. Bikramjit Nag?
No, he was involved intermittently, not on a daily basis. But say major strategic things, for example, buying of the industrial washing machine company, or let's say the backward integration into steel, which still has to do better, etc. We had discussed everything with him, and so he was involved from that angle, but not on a day-to-day matter. Refrigerator plant, he said, IFB should get into this product category, etc. So he was involved, but not in a detailed manner. He was involved more in a broader sense as to what needs to be done, but not the nitty-gritties.
Right, sure. Thank you so much. And my second question is on the pricing environment anticipated when we see are we seeing commodity costs kind of coming down for all players, and do we think that the pricing environment would be more competitive and the competition intensity would improve in terms of the pricing?
If you, this is Rajshankar here. If you look at the last 2 quarters, like I said a little while back, the commodity prices are in a range. We expect that, flattish kind of a range to continue. As far as the pricing environment is concerned, over the last, let's say, 2 odd years, both LG and Samsung have been extremely aggressive as far as pricing is concerned. We don't see any change in that going forward, so we expect that aggression to continue. As far as the air conditioning segment specifically is concerned, it is a segment which has extreme aggression on the pricing side, and we expect that also to continue. So, on a specific measure of what will happen going forward compared to what has happened previously, we expect it to be the same. We don't see any change. Does that answer your question, please?
Okay. Yeah. Thank you so much.
Now, can I just say something, Mr. Ray?
Yes, please.
I think the major issue is the point you raised earlier. I mean, the point that came out earlier on AC sales, etc. And my own take on this is, unless we sell more, we'll have a lot more pressure on everything. The basic question, are we going to face competitive pressure? Answer is yes. But as I had said in the earlier quarters also, our problem is that the sales team, for what we want, a significant portion is not geared to deliver, and the changes are being made. Only thing is, getting people takes a lot of time, because we are being very, very specific in what we want in terms of intellectual ability, and that is taking time to fill up these sort of gaps. And I think no company can shine unless the organization is up to the requirement that one has. And I think that's the gap. I think all the points that are being raised on competitive pressure, on cost, etc., is all actually a function of management, in the sense that if the management is very capable, you will overcome these. And if the management is not very capable, then you'll have the issues that we're having. If you see, for example, engineering division also, we've done good on margin, but not at all good on in terms of revenue growth. And we've taken steps on that. We are making changes, etc. So I think marketing sales across for IFB is an issue. We have identified this as a key weakness, which we must fix. And I think if that is fixed, the other things will fall in place. That's my view. And that this is a function of people and nothing else.
Thank you.
Thank you.
The next question is from the line of Nirvana Laha, an individual investor. Please go ahead.
Hi, am I audible?
Yes, please.
Yes, sir.
Yeah. So my first question is, what is the overall capacity utilization in the appliances division for IFB, and how does it benchmark against the other leading branded players?
If we look at the washer segment, then our capacity utilization would be in line with the other players, benchmark players. If we look at the air conditioning segment, we would be much lesser in terms of capacity utilization compared to the other players.
Can you quantify how much lesser?
Yeah, so if I take the air conditioner for an example, and our current volumes in the range of, let's say, 250 to 300,000, on the capacity of 500,000, then we are roughly around 60%. Whereas benchmark capacity utilization would be in the range of 85% and above.
Okay. And for washers, where are we at?
Washers, we would be at about 80% utilization.
80%. Okay. And therefore, what is the EBITDA margin that we do for the washers segment? Because ACs, we are clear. We discussed the numbers that they are still not EBITDA positive. For washers, how are we?
So what we don't normally give out, the figures by segment. But if you want some specific information, you could speak to Mr. Chatterjee separately. I mean,
sure.
That is the better way to handle this.
Actually, just a question from my side. For Q4, with the volumes going up in AC and with the material costs coming down because earlier stock has been used up by and large. The question is, on that, will you be EBITDA positive in Q4 and in Q1 of 24-25?
That is the commitment that we have made, Mr. Man.
I think they are interested in knowing that.
So, again, to continue, so this 6 to 8 crore per month fixed cost reduction that you've spoken about, I am not exactly clear on the exact nature of the intervention. You mentioned sales a couple of times, so I'm not exactly clear what part of the fixed cost are we reducing. Can you explain this?
I can give you a few examples. So, let's say we have a head of cost called warehousing and logistics. And associated with that is a warehouse that we run ourselves versus a warehouse that is run basically by a CNS, and the nature of the transportation agreement. So are we using, vehicles with 3-piece loadings, or are we ensuring proper milk runs? Are we combining freight and tendering it and negotiating it hard? What sort of agreements do we have, SLAs in place? So the agenda here to be completed is to really take every single warehouse we have, look at every agreement we have, and just go through it afresh, tender it, and drive the costs down, including looking at usage of old vehicles with higher costs versus new vehicles with lesser costs. So if there is an X cost that we are incurring, which is of a fixed nature in logistics, then we just reduce that. So that is one type of an example. The second type of an example are basic office-related costs in terms of the cost of travel and how well it is being planned, whether we are doing tickets in advance or not. And then there are office costs of the EPR regime. So are we just fulfilling the EPR regime, buying scrap from the market, or are we actually taking machines back, recycling them properly, and therefore saving money? So, this is typically those little heads under the head of indirect costs which are very often ignored and definitely not optimized. So the internal project that was given to us was to take every single head of the indirect costs, go through it with a toothpick, and drive the cost down. And that is the commitment that we made, which we also put into the investor report.
Got it. And last time I think you said this was... Yeah, so last time I think you said that this was all done internally and you were not working with any outside consultant on this, right?
Yes, that's right. So we form teams. Yeah.
Right. Sorry, sir. So the question is to Mr. Nag here, that do you think that's the right approach? And what's your view on getting external experts in for this versus letting the internal?
We saw certain things on freight, for example, on a basis, say between one hypothetically city and another city on the same vehicle. We've seen the rates can differ as much as 25 to 30%, for example. Now, to fix this on an all-India basis, outside support is required to some extent, and we are talking to Accenture for this.
Okay.
But significant work we are doing in-house. Certain things like these, where some intervention is needed for a short period, we are open to talking to others, and we started talking to Accenture for about the past month and a half.
Okay. And you think that mandate might start sometime in FY25?
The mandate meaning? Giving them the thing.
Yeah.
Giving them the thing.
Yeah.
Giving them the mandate. No. This will start immediately. I think maybe in the next, all the negotiations are going on. Once it's done, it will start immediately. It will be before March end.
Okay. All right. Clear. So I have two more questions. Can I ask or should I come back and...
No, you can ask. Okay.
Thank you so much. So IFB points, I wanted to understand what percentage of total appliances sales are we driving through IFB points, and do we calculate our ROCE on IFB points? The kind of sales we are doing, what is the ROCE we are driving on IFB points?
Actually, on retail business, you should normally look at return on net asset and ROCE we can look at also. And we have, I think in IFB Point total, Mr. Ray, we're doing about 10 to 11% or something like that, about 10 odd percent. Yeah, and we need to improve throughput in this, and we need to have a proper team. Again, it comes down to organization building. We need to have a proper team to run IFB Point as a retail venture. That is still WIP for us, sadly. But this is a very, very key thing for us. So, for example, in many areas where we couldn't penetrate, we open an IFB Point and people start coming, and then the other dealers start talking to us. So it's very, very lucrative for us from that angle. But this point on ROC, I don't have the figures. We've not looked at it like that to the best of my knowledge. Mr. Ray?
Yeah, the current, so we have two types of IFB stores. One is which the company is running on a rented premises. The other is which is run by a franchisee. So ideally a franchisee should get a 20% ROCE, but currently that is not the case. Figures are between 5 to 10% currently. We have to work to give the franchisees the return in excess of 20%.
Okay. I have some more questions. I think I'll take it offline in a one-on-one discussion. Thank you so much.
Thank you.
Wish you all the best.
Thank you. The next question is from the line of Sanjay Ladda from Bastion Research. Please go ahead.
Hello.
Yes, Mr. Sanjay.
Hello.
Hi, sir. Yeah. Hi, sir. I have two questions. So first is, so we are spending 6 to 7% on the advertisement. So can you throw some light on where we spend on marketing and what is our strategy on that, and what are the benefits we will be accruing in the coming years?
Actually, out of that, the 6.78% that we throw in, 7.2 YTD, out of that, sales promotion is around 3.5%. And rest is on the counter sales representative.
So sales promotion is 3.5%. Then, sir, my question would be, we also subtract from the sales amount the discount amount, right? So then what is the difference between that discount amount and this sales promotion amount?
Sir.
Yeah, so, the scheme is what is subtracted to come to net sales. This head that you see is, as Mr. Chatterjee said, of two types. One is that you have people in the counters who are actually selling. That cost is also reported as a part of this head. That is cost of basically the salaries and the incentives for the people who are explaining to customers about IFB products and making sales. The remaining 3.5% is the money that is spent on doing exhibitions, marketing IFB points, payments to agencies, those sort of heads. So neither of the two which is reported in ad and promotion is related to the schemes. Does that answer your question, please? Or did you want some other clarity?
So sir, just wanted to have a clarification on that. We also, in the previous calls and presentation, mentioned that we are looking to increase our sales guy in the direct channel, right? Because right now we are not present on direct channels. Our sales guys are not present. So, for example, in the Vijay sales, if I talk about, the sales guy from IFB is not present.
Yes, that's right. So what we have shared is that we have gaps in manning in counters where we require a promoter to be inside the counter, and currently the promoter is not there. Those are gaps, and those gaps are to be filled up, and that is also something that generates incremental sales for us, basically. Yes, that is also being done.
Yeah. So, sir, we are increasing on that front, right? And also, will ask you that if the sales promotion that we see of 6 to 7% would be maintained over a period of time as well, going forward?
Yes.
Okay.
So that percentage should reduce, because if we get the proper extraction from the places where we have manpower, that percentage should reduce. Ideally, it should reduce actually. So this percentage will not increase going forward.
So, okay, so the fixed amount will be maintained at a similar level, 200, 250 odd crore. But since we get a higher sales, then this percentage will keep on reducing.
That's right.
So my second question would be on a bookkeeping question from the presentation. So, in the page 20, we see a quarterly product-wise spread. This is actually the same as Q2 which we have reported. And if I go over and above 19, 18, we also mention product-wise sales in the figures, value of sales in crores. So if I match that figure and if I match that percentage figure, that does not, come out the same numbers.
So I would request you to talk to me separately. I will clarify.
Sure, sir. Thanks a lot. Thank you. We'll get back to you.
Thank you. The next question is from the line of Prolin Nandu, an individual investor. Please go ahead.
Yeah, thank you for taking my question and condolences for the loss to the family and the company. First question would be on the air conditioner side. So just to understand it correctly, there is a 42 crore loss in 9 months, right? Had that not been there, our EBITDA from home appliances segment would be close to 180 crores, right? Which is around 6.9% kind of EBITDA margin. Is that a fair number? I mean, just clarifying that.
Yes.
Okay. And secondly, you mentioned that the capacity that we have in plant is 500,000 units, and we will reach break-even at somewhere close to 350 to 400,000 units. And right now we are at 60% capacity. Am I correct?
No, please. After the material cost reduction is over, the break-even drops substantially. So the break-even will come to something like 240. The break-even will drop significantly, yeah.
Okay, so break-even will drop. So what is the current run rate? Let's say, for example, in Q4, what is the run rate at which we are producing, here in this plant?
Our Q4 run rate is planned at roughly about 30 to 32,000 to 35,000 per month. So about 110,000 odd, yeah.
Okay, so this is more of a seasonal thing, right? Q1 would be the heaviest, right?
Yes,
if I understand it correctly.
Yes, I think one agenda we have is to deliver these Q4 numbers. And then the second agenda would be that typically in the Q2 and Q3 period, we have to be able to maintain a bare minimum volume.
Correct. So that's where I was coming from, sir, that when you said that 80% of the work needs to be done on the material side, and you briefly mentioned about some of the contracts and tendering, right? So, have we significantly changed the gross margin numbers for a unit of air conditioner because of all the changes that we are making in material costs? Let's say by the end of Q4, will we have achieved that significant and sustainable change in material costs?
Yes, that's right.
And what can you double click a little bit on this material cost just to understand that whether it is sustainable or not? Apart from the tendering part, is it something that we are sourcing it from India versus outside? Are we bringing something in-house? Can you give us some more texture on this aspect?
The bulk of the air conditioning material cost reduction is actually we had gone back to the drawing board and redesigned the electronics and also redone the supply chain for the electronics. So it is design and sourcing led, not so much consolidation or tendering. So it has nothing to do with commodities, and therefore it is definitely sustainable.
Great. And, there was a question on Dixon and Ember, and somebody told you to report their EMS segment differently. So just, some of these companies like Ember also sell to some of the brands, right? So for us, the way we have built up the plant or the way our customers are on the OEM side of the business, is it like significantly different? Let's say, for example, we have a assembly line. So in terms of material that goes into the AC which we make for our own brand versus what we do for an OEM? Is it like, I mean, does it start from material, material being different for what we do for our brand? How is the difference? I just want to understand how is the correlation or interdependence between the two segments within the aircon?
So the basic material composition that we are making for the IFB brand or for the OEM is not different. But the features, etc., could be different. But the inherent quality that comes from the platform is the same.
Right.
But if you compare the platform that a IFB is making versus the platform that a traditional OEM supplier is making, of course, there is a very large difference between the two platforms.
I understand. So it's like more about the features, right? Let's say, for example, hypothetically, you would be making something which will be connected through a Wi-Fi, right? I can connect it through a mobile, and some of the other brands might not be doing it. Just one feature, right? In sometimes. So, significant value add will come from something which is similar in both the segment of the business, right? So, what we are trying to understand here is that until and unless we don't increase our brand presence at the ground level or our market share, is this not a route to increase our utilization in the plant, right, in terms of OEM? Because this segment is getting good traction, and there are a lot of players in India who are branded, who are established, who have a very good market share. They are now looking at backward integration, and they are now looking at partnering with some of the EMS players that we have already mentioned on the call. So what is your thought on that at least in the interim, till we reach a significant market share in the market, to use this as a utilization tool so that our plant reaches utilization quicker rather than later?
So my answer to you would be on two heads. One, like Mr. Nag just shared a few minutes back, at the end of the day, there is a sales that has to be delivered, and it has to be delivered tomorrow. And that is the primary agenda. Now, having committed to that, which we have to deliver in any case, yes, for the partners who are wanting to buy from a source, and if the IFB product platform fits in with their own requirements in terms of the platform quality that they want to represent, yes, we have to go out and search for partners and fill the plant capacity. So, whichever way we do it, the primary agenda being the IFB brand sales, and the complementary agenda is basically the supplies to partners and OEM capacity. At the end of the day, if we fill 450,000 next year for the plant, we've been able to deliver our agenda.
Understood. Fair point.
But I just want to reiterate the point that the primary agenda and the product platform we have, including the company level profitability, it is the brand sales that are the most important.
Sure. Fair point. I take your point. So now coming on to your engineering side of it, right, which constitutes close to 80% of the revenue, and margins at least, compared to our home appliances side for 9 months are better, right? So what is our plan there, right? I mean, as Mr. Naz mentioned that there also margins are good, but we are not able to grow the top line. So within, some of the segments where we are present, what is our plan there? And have we, somewhere in one of these slides, I also mentioned that we are looking for an acquisition which should be of the size of around 600 to 700 crores. So which is the segment where we are looking to acquire something in engineering side of it? And what is an overall plan for the B2B side or non-B2C side of the business?
This is Aruntas. I will respond to your question. As far as engineering business is concerned, you are right when Mr. Nag made this statement that top line growth hasn't happened the way it should have. So there are two-fold strategy. One is grow the existing business with maximum presence in all the segments wherever we are, increase our share of business there. That is either four-wheeler, two-wheeler, three-wheeler, commercial vehicle, etc. So that is normal growth, which the market, as the market drives off, you also grow with the market or little better than the market. Then, as far as the M&A is concerned, we are looking into opportunities for businesses which will be futuristic in nature. That means we'll have prospects, not the businesses which will go into disruption, like the non-EV businesses, where the ICE, etc., two-wheeler ICE, lower CC engine, so that sort of business we'll try to avoid. We are trying to find out businesses which has, number one, a synergy with our business. Number two, it has a growth potential. Number three, it will be shielded against the disruption of the forthcoming technological changes which it might have.
Sure, sir. Do we have any proposal already on the table?
It's under discussion. 3-4 companies are already under discussion. So once things take shape, preliminary discussions have happened. So once it takes up shape, we will definitely inform our shares.
Great. Thank you. And last question would be on this motor division, right, where we only report the sale of BLDC motors, which is to the external customers. There, the number right now is, 9 months was 50 crores. Maybe we'll do around 70-80 crores. But in terms of capacity of motors, that we can sell it to the outside, other customers. What is the capacity look like, or, can this number be close to 150 crores or that annual run rate just from the capacity point of view, from a BLDC motor specifically?
Okay, this is Anand here. The installed capacity of BLDC motor for washing machine is 1 million units per annum, and for air conditioner is another additional 1 million. Both put together can give us a revenue of around 150 crores when fully utilized.
Okay, and this is external sales, right? Am I correct?
It includes both external and internal.
Okay, so out of this 150 crores, how much would we be utilizing internally?
Internally, we will be utilizing 50% of washing machine capacity and 20 to 30% of air conditioner capacity.
Okay. 20 to 30% of aircon and 70% of washers. Okay, great. That's it from my side. All the best, team. Thank you.
Thank you. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi sir. I just have a question on the engineering part of the business. In the presentation, you have mentioned that you are under discussion for a 350 crores of business with customers, which is under negotiation. So just wanted to understand, is it more like it's a given contract and only the pricing is being kind of talked about, or is it the contract is still not firm in nature?
The contract is not firmed up yet because we are in detailed discussion about the businesses, sales plan for the future, product line which they have for future in store. So, a lot of discussions are yet to happen. It's under discussion, but once it takes up shape, we will inform.
And this should be more like executable in couple of years, this kind of an order?
No, running business.
Okay, running business. Okay, got that. And sir, one other question to Mr. Nag in terms of more from a 3 to 5 year perspective. How do you want to navigate IFB Industries and more towards the home appliances segment? It is like you have a certain market share in mind, or you have more product addition like ramping up of refrigerator. What are 1 or 2 parameters which is most important to you? Is it market share, return on capital? How are you looking at IFB Industries in your scheme of things? Thanks.
Thank you. The next question is from the line of Gopal Khandelwal, an individual investor. Please go ahead.
Yeah, there was one question which was not answered. Should we answer that?
Sir, you can answer the next question.
Yeah, just 1 second.
Yes.
Mr. Nag, are you on the line?
No, sir. Mr. Nag is not.
Just hold on a sec.
Yes.
Okay, I think we can continue with the next question. As soon as he joins back, we'll answer this question. Is that okay, please?
Yes, sir.
Yeah.
Okay. Am I audible?
Mr. Gopal, please go ahead.
Yeah, am I audible?
Yes, please.
Yes,
please.
Yeah, sir, I wanted to understand what is our total contribution of sales from e-commerce currently for home appliances.
E-commerce is now around 17% YTD.
Okay. Sir, if I may wrong, but what I recollect, I think in last call or last to last call, we were kind of saying that we are pretty much focusing on increasing the penetration in our retail store. But are we, in parallel to that, are we also taking some steps to increase our penetration on e-commerce websites as well? And if we are taking those steps, what are those steps?
Yes, so actually the extraction from, let's say, distribution network and an extraction from the e-commerce platforms, both are parallel agendas, right? So there's no conflict between the two. Yes, we can definitely do much better as far as the e-commerce platform extraction is concerned. And that improves through continuous product planning, price point planning. For example, if you see currently our sale of air conditioners from e-commerce is 0. We haven't listed so far, but starting from this quarter onwards, we will retail air conditioners through the e-commerce platforms. Similarly for expansion in areas like microwaves, top loaders, front load. So yes, there is definitely an agenda that we are pursuing for increasing the e-commerce extraction as well.
Okay. So, last thing, I just have one suggestion. I think I've shared this suggestion a couple of quarters back as well. I'm not sure if we have a dedicated team who can address the queries or concern, people raise as a part of review on e-commerce website. Usually what happens whenever a person goes and try to buy air conditioner or washing machine, people have a habit of, reviewing the reviews. And if you look at the reviews, there are certain negative reviews as well. So if we can have a dedicated team who can, review those reviews and address those reviews on the e-commerce website, so that would, eventually increase the confidence on the consumer that, okay, there are team actively looking at those reviews and certainly responding those reviews. So if you get time, if you go to those e-commerce website, we can see there are certain negative reviews. But if we, as a company or as a marketing team, if you can respond to those reviews and what action we have taken, then I think it will boost up the confidence of the consumer who are coming to those e-commerce websites. I think
yes, it's a very, very correct point that you're making. And in fact, we did take this suggestion. We have a dedicated team now. And in the last quarter, we've actually improved our review ratings. But we have to do much better on this. And that is an agenda we've taken. There's a dedicated team on this, please. And we will work on this. Thank you for the suggestion which you'd given earlier as well.
Thank you. That was the last question for today. I would now like to hand the conference over to the management for closing.
Yes. Could you just wait a second because there was one pending question left. Let me just see. Just hold on a second, please.
Okay.
Just hold on. Yeah. Could you just repeat that question, please? And Mr. Nag will just answer that. Just a second.
Sorry, but my line keeps getting cut from my room. I just don't know why. Go on, please. Ask a question. Sorry, you had asked a question, please. My line keeps getting cut. Hello? Hello? Hello?
Sir, he's not there in the call, sir.
What was the question? Do you remember?
No, sir.
Yeah, I've been at a 3 to 4 year horizon.
Hello. There was a gentleman who was asking about a 3 to 5 year horizon picture for IB Industries from Mr. Nag. Could we have a repeat of the question, please? Hello?
Sir, he has left the queue, sir.
He has left the queue.
Yes.
Okay, fine. But I'll just give the phone to Mr. Nag. He'll just answer it, please. Huh?
Hi. Sorry. And I've understood the question now. Sorry that my line keeps getting cut off. I think we are very clear. Appliance business, auto component business, ideally we would like to grow it by 2.5 to 3x in 3 years. We are working towards that. As far as appliance business goes, it should grow by at least 30-35% a year. But more importantly, it's not the revenue growth. We need to fix margins, and we need to move to double-digit margins fast, which is by end of this quarter, early Q1. I think the first point in appliances is that. But in auto component, I think margin should stabilize at about 80%, and we must look at growth. And for the year, we don't give any guidance per se. For next year, I'm talking 24-25. But I think we need to substantially grow, and therefore M&A is important, and we're looking into that, and may add about 500 crores plus just on the M&A side. Thank you very much. Thank you.